Investors around the world are feeling nervous as there is a new competitor in the market. And here's why this is significant. I think we all know that Nvidia had always been the backbone of AI and machine learning for so many years, and it has a strong pipeline of innovation. So any real competition like DeepSeek's low-budget success could change the dynamics of the sector. So let's cut to the chase, and what does this mean for investors like you and I? So in the short term, we can definitely expect volatility, but in the long term, I think it's still unclear whether DeepSeek is able to scale and sustain growth. In fact, following its sudden popularity, it was hit with a cyber attack just on Monday, which forced the Chinese company to temporarily limit registration. So I think right now it's still too early to write off Nvidia, but it's better to keep tabs on what's happening on the developments in this space. So let's go back to fundamentals, right? Nvidia itself has been positioned as the world's leading GPU firm, and I think this is under no obvious threat. However, we had always thought that large language models, or commonly known as LLMs, needs like the best chips such as Nvidia GPUs in order to compete. And because of this, if you have been keeping track with Nvidia's reports, its sales has been able to grow so significantly year on year over the past years. So the issue right now, guys, isn't that another company like DeepSeek has managed to start generating a more powerful chip than Nvidia. It is just that this LLM, or large language models, might not actually need like the latest and most powerful hardware to kind of like reach the top. So the bottom line is DeepSeek has found a way to achieve its own model that outperforms the OpenAI from Microsoft and Gemini from Alphabet, and all this without the most powerful GPUs. And that's why this is spelling trouble for Nvidia, because lesser demand on this chip, right? So based on my research, the stock is actually trading at a forward price to earning of around 28, and not only is it the lowest level since 2020, it is also in line with the S&P 500 average. However, the catch is that such earnings estimates, has not priced in the so-called weaker demand based on the idea that LLMs might not need Nvidia's most advanced GPUs. And that's why I think I'm not going to rush into buying it, because these profit forecasts might get cut and analyst price target is going to start coming down. So I'm definitely not going to rush into buying their shares, as the current share price could still be reflecting positive expectations from investors. And if you have been keeping tabs, it's quite insane, but President Donald Trump's threat of imposing tariffs of up to 100% on chips made in Taiwan is going to give Nvidia a new headache. This is actually very bad news for Nvidia because it relies on Taiwan's TSMC for its chip supplies. In case you don't know, TSMC is one of the world's largest contract semiconductor manufacturer that specializes in making AI chips. So higher tariffs means it's going to be higher cost. So overall, all these are pointing to the fact that Nvidia chips may face a decline in demand, which means lower turnover and profitability. And therefore, I think investors like you and I need to be extra cautious. We should not be rushing into buying into these shares of Nvidia just because the share price has fallen. So guys, if you have been watching till this point, what do you think? Let me know your thoughts in the comment below. And once again, this is not any financial advice. All these are my personal thoughts. And if you can, do remember to hit the like, share and subscribe button on that financial goal.